What's up guys, and welcome back to Wall Street Millennial. On this channel we cover everything related to stocks and investments. In this video, we're going to go over some of the greatest gains and losses on the Wallstreetbets forum over the past week so we can learn from other traders' experiences. First off, we have user Andrew WK Party, who posted a staggering 11,413% or $2,600 loss by selling Workhorse puts. Workhorse's stock has freefalled almost 50% over the past 2 days, down to $16.46, blowing past all of its strike prices. This came on the news that Workhorse lost a nearly $500 million deal to upgrade the fleet of US Postal Service trucks. The deal was instead awarded to defense contractor OshKosh Defense, who will be making new delivery vehicles in partnership with Ford. Many investors thought that Workhorse had this deal in the bag, and it was very significant to the company, not just for the $482 million of revenue that the deal would generate, but also because producing the USPS's fleet would give Workhorse the credibility to earn larger contracts going forward. The deal was also a little surprising because OshKosh Defense is a defense contractor that makes light tactical vehicles for the military. Workhorse's electric vans seem much more suitable as delivery vehicles. So the fact that the USPS picked OshKosh over Workhorse was a huge blow to the company and resulted in the stock price being cut in half. This Wallstreetbets user sold covered puts on the stock. While selling options is generally considered less risky than buying them, they still have the potential for significant downside, especially when you are selling puts on the volatile meme stocks like Workhorse. In this case, the OP lost 11,413% in one day as the puts increased in value by more than 100 times. This goes to show the asymmetric payout possibilities when selling options. Most of the time, you make a little bit of money by collecting the premium, but once in a while you get a scenario like this where you incur massive losses. Next up, we have user Kadir12, who posted a screenshot of his daily P&L, showing massive gains on Airbnb, Boeing, Delta Airlines, Snapchat, and United Airlines. All in all, he was up more than $116,000 on that day, bringing his portfolio value to a total of $834,000. Most of the stocks that he is currently holding have been strong performers in the past several months, including Airbnb, which is up 42% since its IPO last year. The airlines, which he holds in the form of United Airlines and Delta, are also up massively in the past 6 months to a year. American Airlines has done particularly well, up more than 60% and approaching pre-pandemic levels. But Delta is the one that's up the most, 65% in the past 6 months. It was also the OP's biggest winner out of the airlines, netting him $21,000 in one day. However, that doesn't even compare with his biggest winner, Boeing. A few days ago, the engine on a Boeing commercial plane failed mid-flight, harkening back to the 737 MAX disaster that cost Boeing billions of dollars off its stock. But after 2 days of negative days, the stock price rebounded on Wednesday, possibly because of the prompt and decisive reaction to the incident by Boeing's management. On a single day, Boeing was up 10%. Luckily, the OP probably owned calls on Boeing because he made $80,000 off this single move. Based on the title of the post, he probably likes making short-term bets on price movements. For someone like him, with a 6-figure portfolio, that is something he can do freely, but for many people, day trading will get you banned on Robinhood and other platforms. User PDaddle says that the way to get around these bans on day trading is to roll your options into spreads and then fully unwind a day later, so that it doesn't count as a day trade. What he means is, for example, if you buy a call on a stock and then later that day the stock goes up and you want to lock in the gains, you can sell a call at a similar strike, which will massively reduce your exposure to that stock. But since you aren't closing any positions, it doesn't count as a day trade. Then, the next day, you close both call positions. It's not a perfect strategy because it requires you to lock up some capital overnight and doesn't fully protect you from the stock going down, but it does get you past the pattern day trading restriction. However, as with any day trading strategy, it carries a lot of risk and should not be done by most people. Next off, we have user Glide Outside, whose portfolio swings are not particularly impressive on a percentage basis, but are notable because of the sheer size of his portfolio. His portfolio started out at the $2 million mark, and over the past 4 months 6x'd all the way to $12 million, making the OP a decamillionaire and briefly putting him in the top 0.01% of net worth. And to make matters even more impressive, he started off with only $200,000 in May of 2019 and 10x'd his investment to have $2 million by November of 2020. He made these gains mostly by playing leaps on EV stocks like Tesla and SPACs like Canoo and Lucid Motors, which is merging with CCIV. LEAP stands for Long-Term Equity Appreciation Securities and are options with expiries more than 12 months away. This strategy worked extremely well in 2020, but all good things must come to an end. While LEAPs can yield massive profits when the stock is going up, they can take those gains right back if the stock starts reverting to the mean, which is exactly what happened with Lucid over the past couple days. But despite his recent setback, Glide Outside is still an octillionaire, which is more than enough money to just cash out and live the rest of his life in Hawaii. Some fellow Wallstreetbets users encourage him to just cash out and do just that, and to avoid losing his fortune on future YOLOs. But the OP has no intention of backing down. Last year, he posted gain porn of his portfolio going from $500K to $2.7 million, and at the time, the comment section told him to cash out and stop gambling. Had he taken this advice, he would be more than $5 million poorer than his current net worth of $8 million. So he intends to continue gambling with these gains. He might lose everything, but at the same time, he could 10x his money again and become the first WallStreetBets degenerate to reach $100 million. We wish you Godspeed. Next up, we have user Dogster99, who posted a huge gain on OshKosh calls. OshKosh is a truck company that recently beat the EV company Workhorse to get a $500 million contract with the US Postal Service to supply close to 100,000 vehicles over the next 10 years. On this news, OshKosh stock immediately spiked, while Workhorse stock tanked by 50%. Luckily for the OP, he was on the right side of the trade, and made a handy 588%, good for $8,000 off a base of $1,400. He held 3 contracts of 125 strike calls on OSK, expiring in April. They are still significantly out of the money, but the mark-to-market price increased enough for the 588% gain. This trade was all thanks to a DD post from a few weeks ago by user Ian about Workhorse and OshKosh. In fact, the OP says that he was about to YOLO everything into Workhorse before he saw that DD. This just goes to show, if you don't do your own DD, you could end up YOLOing into something that tanks 50% and lose everything. But with the right research, you can end up making 588% gains in a single day like this guy. Congratulations on your well-deserved gains. Next off, we have user SnackDeveloper87, who lost $100,000 on NNDM calls over the past week. Fortunately, he was playing with the gains he made on playing FDs. In all, his portfolio swung from $13,000 all the way up to a peak of $155,000 just to fall back down to $55,000. He made his initial 13 times gain by doing extensive DD to find undervalued high-growth stocks that have low implied volatility, so the calls were cheap. This strategy brought his account all the way up to $155,000, and last week he thought he found the perfect stock for his next YOLO. He then proceeded to put his entire account into NNDM calls. NNDM makes innovative 3D printing technologies for producing electronic circuitry. The stock had increased more than 12,000% for the year at that point, and it makes up more than 2% of Cathie Wood's ARC Autonomous Technology and Robotics ETF. All of these factors made it the perfect candidate for a WallStreetBets YOLO. Unfortunately for this WallStreetBets user, whenever a stock goes parabolic like this, there will always be someone who buys in at the top, and the stock fell more than 30% from the highs right after he bought in. This caused him to lose more than 2/3 of his portfolio. He was willing to gamble his money in such a reckless way because he has a 6-figure job, presumably working as a full-stack web developer. He also owns some income property, so he can always rely on the rent from his tenants. The money he put into the stock market was specifically for YOLOing on the money that he doesn't need. In the comments section, some fellow WallStreetBets users criticized this post as despite the weekly loss of $100,000, the OP is still up significantly from his initial investment of $13K, so it's not really fair to call this loss porn. The OP defends his post, saying it really was a real loss, and the comments thread quickly devolves into degeneracy as they start questioning the smoothness of each other's brains. Alright guys, that wraps it up for this video. If you like this content, make sure to hit the like and subscribe buttons, and leave a comment with what your biggest conviction plays are today. Also make sure to follow us on TikTok and Instagram. In the meantime, thank you guys so much for watching, and we'll see you in the next video. Wall Street Millennial, signing out.